Hello guys, this is Oba FX Trading Academy and welcome once again to my YouTube channel. It's another weekend and as you all know, every weekend we, as part of our top-down analysis series, since the financial market is basically closed till next week, so we try to pick Deriv synthetic index to analyze for those of us that trade during the weekend. Of course, we all know that Deriv synthetic indices it's the kind of market that you can trade 24 hours, 7 days a week. So today we're going to be looking at Crash 900 index using top-down analysis using our pure price action trading strategy. So we're going to be doing our top-down analysis series on Crash 900 index. So without wasting much time, let's get to it. As we all know, I use majorly three tools in my analysis. First is the trend line, the second is Fibonacci retracement tool, and third is support or resistance as the case may be. So also, I like to start my analysis from the weekly or the monthly time frame, but because this index doesn't have much information because it was just added by Deriv in 2024, August 2024 to be precise. So we'll be starting from the weekly time frame where we'll have more information. Now, from merely looking at the charts, we can see that for a while now, the market has been dominated by buyers. However, there was a period here where the market went into a range, then sellers tried to push the market down. But however, currently, buyers are pushing it up. But also, we can see a rejection candle here, also telling us that sellers are doing everything they can to push price down. But just merely looking at this is not enough to make any decision as regarding what we'll be doing regarding our trading. So what I'll do will be to take these out for us to then go to the daily time frame to see if we can know more. Yeah. Now from the daily time frame, we can see that after this period of consolidation, the market went down, made a series of lows. But however, as we can clearly see now, buyers succeeded in pushing this market upwards and price is currently retracing downwards. So now I can safely impute my first tool, which is what? My trend line. So this video, I'm going to try to make it very short. So trend line, because the market made a high, made a higher low, made another high, and price is currently retracing. So the second tool, like I promised, I can now impute would be my Fibonacci retracement tool. So from a swing low to a swing high. And for those that have been following my analysis, you know that there's an area in this tool that is very potent as regards acting as either a support or a resistance. So in this case, because we are in an uptrending market, we'll be expecting it to act as what? A strong support zone. And that's the area between the 50% and 61.8% mark. So we'll map out this zone, hoping that when price gets into the zone, we expect buyers, a lot of buyers to be waiting here to push price upwards. Now, another thing that gives me confidence most times about this zone each time I draw it is when it coincides with an existing support or resistance zone. Now, how do I mean? If we see each candle on the daily charts represents one day, that's 24 hours. Now we can see that if just like immediately I drew this zone, I extended it to the left. And we could see that this zone has acted previously as a strong resistance zone for days. In other words, it rejected price for 1, 2, 3, 4, 5, 6 days. And that's not a small time in the trading market. So also, even when price broke through, price tried to push back down, it rejected price. So it has acted in the past as a support, a resistance zone, and a support zone as well. And price is currently retracing towards this zone. So this confluence is added together gives me a lot of confidence that if price should get into the zone, then there's a high probability. Remember, trading is a game of probability. There's a high probability that buyers will be able to push it to continue in the upward direction. Also, another thing that I noticed is that one thing that gives credence to any support or resistance zone is if there is another zone above or beneath it that has been used as a liquidity zone or that has acted as a liquidity zone. Now, what do I mean? If we look at this upper part that price has just taken out, this was a very strong resistance zone in the past. And this part has just been used for liquidity in the sense that the market makers know that a lot of traders will be waiting on this zone, especially those that trade in the much lower time frame, will be waiting in this zone to place buy trades, and a lot of them would have, you can see that price was rejected here once, so a lot of people would have stacked trades here, and guess what, where would their stop losses be? Underneath the zone. So we can safely say that the market makers have just liquidated a lot of buyers that bought from this place, and price is currently coming into the confluence that we've put together. So that's another reason why I'll be very confident that something is likely to happen when price gets into this zone. So let's go to the H4 time frame. Now we can see that it is much more clearer. So let me take out this liquidity zone. The question a lot of you will be begging to answer would be begging me to answer would be, what do I do when price gets into the zone? Now it's simple. If price gets into the zone, you can start immediately. You start seeing green candles, then you can start looking for what buy entries. Buy entries in the sense that you can go to the much lower time frame, maybe the H1 or the M30 time frame, to look for a few things. Now, because the market is currently coming downwards, you can look for bullish reversal chart patterns in this lower time frame. Then you can also look out for bullish reversal candlestick pattern. An example is like if you should see a bullish engulfing candle here, then it will be safe to take your trade, and your stop losses should be underneath the 61.8 mark. Now, this is a simple top-down analysis using these three simple but powerful tools: a trend line, a Fibonacci retracement tool, and a support or resistance zone. So like I promised, I'm not going to be stretching this video. If you're lucky enough to come across this before the weekend runs out, or even within the week, then you should know that this will be very helpful. You can compare this also to your own analysis to see if it tallies. So like I would always plead, if you're coming across this channel for the first time, or even if it's not the first time, you feel that this analysis has been of any value to you, I'd like to plead that you simply hit on the subscribe button and turn on your notifications for subsequent analytical videos. Also, we are open as an academy for training and mentorship. If you feel you want to start out your trading journey, or you just started out or you've been doing this for a while and haven't been able to get a hold of it, you can reach out to me via the WhatsApp number on my bio. Also, we do account management with proper arrangements. So if any of this applies to you, please, you can always reach out. And finally, hit on the like and share button for others to see this video. Thanks a lot for your time, and see you some other time. Enjoy the rest of your weekend. Cheers.